Hey, Joe, glad you're here. So welcome everybody to another eye-opener. This is Mark Walker, this quick little video chats. Joe, great to have you with us. We were just talking a little bit. I was kind of walking through the market and kind of the wild impact of these tariffs. And going back to the beginning of the year when all this nonsense started, it's just been a roller coaster. And these things it's like the tail wagging the dog almost. You got announcements coming out that maybe ifs and this might happen then and then delayed, and it's just all over the place. But boy, the market is just drinking the Kool-Aid left and right, and kind of watching the impact of that on the broad market. um, and then looking for the places where we can find good trades, looking through that noise to find the great trades that really are good opportunities. Because and in all truthfully, the volatility does shake out some nice opportunities. So really interested in what you're looking at right now.
Okay, thanks, John. First of all, am I on screen share with you guys? Can you see my screen, or do I need to do
Not
something
yet.
here?
No, I don't think
Not yet.
we can see.
Okay,
Yeah, there's
okay,
a little green button down on the bottom. Just go ahead and click share, and then
okay, okay. All right. Okay. Oh man. Okay, here we go. All right, gotcha. All right, I'm with you now. Okay. Did that help? Am I sharing? Am I there? Okay.
not yet.
I got a choice. I'm coming. I'm coming. Let's see.
Click it harder.
Okay. Okay.
There we go. Up.
There we go. Okay. Are we there?
Double click to enter. You started screen sharing, but it's just black. So there we go.
Oh, geez.
Now we're talking.
It's all mine.
Awesome.
Let me double apologize here to everyone. I'm so sorry. Because I honestly thought we were, as I said to John before, I thought we were doing market opening at 9:30. So that's my bad as well. Okay, yeah. In terms of the tariff, John, those of you who read the daily, well, it's not daily. I think it's 2 or 3 times a week that I'll send a comment on John's space there. Um, you guys were aware of what we were thinking for the last several months, and including through this rally. And the update that I sent before yesterday was thinking, listen, it's probably going to have a little bit more upside, and that the place to be was in the semiconductor stocks like Nvidia. And of course, that's exactly what happened yesterday, boosted by some good news. But still, that's what I expected to happen, and that's what did. Now, in terms of the bigger picture, in terms of the tariffs, I'm a little bit worried about it. A couple reasons. One is, I think I highlighted the other day, is the stocks that I identified at the bottom as being early adopters to this rally. That would include Netflix and Palantir and Roblox and Uber, some esoteric and widespread names. Those are for the first time starting to look a little tired to me. Now, that doesn't necessarily mean the market's going to go back down, or it doesn't mean it's going back down right away, but they are possibly canary in the coal mine stocks to keep an eye on. Now, in terms of the actual news with tariffs, I would say that, well, as you pointed out, John, it's a crazy situation. But the good news is really not, is it good news, or is it just a retraction of bad news? And that's what I think it is. And that lends me to still be thinking, not too far down the road, that there's going to be some more bumps. So that's my view right now. As those of you who are subscribers know, that we have a couple of spreads on right now that are doing pretty well for us. One of them is not doing too well, and that's Starbucks. But I got lots of time on that, and lots of time to manipulate them. So that's where we are. That's what I think. I think short term is still higher. Today, possibility of a pump and dump, which means could get out of the gate with a gap up, but I won't be surprised if they can't hold that gap all day.
Yeah, I've been watching in just kind of trying to get a sense of where people, we've had this recent rally coming up, and you start to see some profit taking along the way, and you get these kind of pullbacks a little bit, taking breath. But man, it just is, everybody's kind of buying and holding there, and riding this thing up, pushing up higher and higher. I feel like, in the last week or so, we've kind of leveled off a little bit. We're hitting some resistance. Is that what we're seeing? Are we seeing people saying, I don't want to risk it. I'm going to lock in some profits here. And what point does that then roll and start to shift to people start to sell
Yeah,
off?
yeah. It's interesting, John. I don't think it's probably not people locking in profits that causes the decline. Crazily enough, it's people not locking in profits almost in a way. If people get it, which indicates that, oh, they still think it's going higher. If everybody thinks it's going higher, everybody's long, so there's nobody left to buy, and that's when things start to roll over. So and I get the general impression, and the so-called sentiment in the market and various ways to measure it with puts and calls and you know AI investor surveys and so forth. It's always a bit subjective, but one of the ways that I find to measure sentiment is if you measure or if you read social media like X, formerly Twitter, and it's not so much the posts, it's the replies to the posts where you start to see people give their unfiltered opinion. So I try to read through some of that stuff to get a sense of what people are thinking in general. And my sense is that, there's a lot of, oh, this market's never going to go down, just buy the next dip, or there's a little bit too much bullishness for me, to be honest with you. It's not reflected yet in some measures of sentiment, but it doesn't feel real comfortable to me. Like I've thought for a while, like we were right on the decline in February and March and made good money on the way down there. But even before that, I was saying, listen, the first half of this year is not going to be, it's going to be choppy with a bias to lower. And we've seen some of the bias to lower, but I still don't see, I don't see sustainable new highs coming in the first half of the year. I don't. I think you're more likely to get more chop or another leg down right now. So yeah, that's where
Yeah.
I sort of
Well,
fall on sentiment.
yeah, we saw it with the earlier, like a week or so ago, where we kind of were waiting for the tariff news, and then it gapped up, and the resistance turned into support. And
Yep,
now I'm seeing it as kind of almost creating that range. I mean, it's just
yep,
getting range bound, and we're going to start to see it going sideways.
yep.
I know you got a bunch going on with the X-ray indicator. I've been really, really impressed with it, and I've been loved the times you and I get to talk about it. I was hoping maybe you'd be able to kind of talk to everybody else a little bit about it because it's doing some pretty incredible things, both finding great trades and keeping people out of bad ones. So
Sure.
I don't know if you could share a little bit about it.
Sure, sure. I just want to say one thing about the gaps, okay? Just really quickly, because you made a really good point about the gaps there. In the last 2.5 years, whatever the market's up like 50% or almost 50%, 100% of that gain has been on gaps. In other words, if you bought 2.5 years ago and held till now, you're up 50%. But if you bought every morning and sold every night at the hypothetical open and close, you're zero. You're nowhere. Okay. So we have to be able to think near the close of the day or after say 2:30 Eastern time with an hour and a half to go, what does the market look like for tomorrow? Because that's the time to take your positions for the next day. All right. Okay. Now, in terms of X-ray indicator, those of you who aren't familiar with it, and let me get rid of this. Is another prop indicator that I've got at the bottom here, but I'm just going to get rid of that. Uh, Basically, the strategy is this. First of all, if the last time this turned blue, if you can, I don't hope everyone can see the vertical cursor there or the little X that's the little hand now that's waving around. That's the last time that the bars turned blue. Now, a signal on X-ray is number one, the bars turn blue, and number two, you look below to see if the bar at the bottom of the screen here is also blue or has just turned blue. So as simple as that. So if you get one or the other, it doesn't mean anything. If they both happen at the same time, great. Or if the bars turn first and then the X-ray permission indicator is already blue. Okay, so we had a buy signal here. This is NVIDIA. We had a buy signal back here at 111 or so, or actually it would be the close of the day, so it'd be more like 112 and change. And of course now we're up to 136. And similarly, but what you also want to do is you want to kind of take advantage of the trend. So I like to see, before I take a buy signal, I want to see at least a higher low. So you can see here, we made a low here in NVIDIA, then we made another low here, then we made another low here, then we get a buy signal. Okay, so that would be a nice buy signal to me because we've made a couple of higher lows. I don't like buy signals that come right off a low and start spiking up and give me a buy. I'm not fussy on those. Okay, so similar on the sell, you can see we made a high here in NVIDIA, made another high here, made another high here, and now we've got a change to red. Does that? And this one actually was not a sell because when we look below, if you look straight below, it's still blue. So I missed it by a day. Okay. So that's how X-ray works. I'll tell you, one of the markets I'm looking at right now is crude oil, and you can participate in some oil stocks with crude oil too. Conoco's a good one for taking the price of crude, and so is Devon Energy. But you can see we've got a bunch of, and this is exactly what I was talking about just a second ago. You see how we came off this major low here and we got a blue bar and it was blue below, but I don't take that trade because I don't have any high. It's just coming right off a spike low. I don't want to set. I want to see it make a couple higher lows before it gives me a buy. Now, in that context, this blue bar here, which happened yesterday, could well be, well, it is a buy actually in my view. So it's 61 and a little bit on crude oil. We've got a buy. Listen, if it takes out these recent lows at 60 and change, then it's no longer valid. But let's look at how when these bars turn colors, what the size of the moves you're getting. Now, so if I'm risking to the recent lows here, that's a relatively small move compared to capturing a bigger move out the top. So crude's one I like. Showed in the video. There's not a lot in stocks right now because obviously stocks are extended, so you're not getting a lot of fresh signals here because you're going to get your best signals when we have a move up, some consolidation with a higher low, and then a return on the move up again. And that's where it often will give you your best signal. So it will look like crude oil here, but except in stocks. And of course, most stocks, if we look at the SPY, as a representative of the index, most stocks are standing straight up in the air. So again, you got your buy signal back here in SPY, right? It turned red, it turned blue. It was blue below. You had a higher low here. And so, off you go. Okay, so you're not right this minute. You're not getting a lot in X-ray in terms of signals for fresh stocks, just because of the way the market is. It's standing straight up in the air. Okay, so,
we had a question from one of the folks in the room. We're asking about GM. If we could pull up GM and just take a look
sure.
and see what that looks like, because sometimes you can see, like, the great thing about X-ray is not only is it going to show you and give you a heads up when, hey, this is really looking good, this is time to get in. You can look at the top, look at the bottom, match them up. But it'll also kind of give you a little bit of a caution and keep you out of some, landmines before you'd step on it.
Yeah. So let's look at GM here. So this is the first time it turned blue coming off the low. Would I take that signal? I look below and it's blue, but would I take it? No. Why wouldn't I take it? Well, because we don't have any higher lows. We don't have a pattern of this thing looks like it bottomed here, right? So that is not a signal, okay? But now I come back down here again, and now I'm making higher low, and now it turns blue right here. So that is a signal at 47, and 3 days later we're 51, which in GM is a huge move. Now it's retraced a lot of that, but it hasn't given me a sell signal yet. Is it potentially, could it have a sell signal? Absolutely, because look, we've got a bunch of lower highs here. So if it was to actually flash a sell signal here, it could be a valid one in GM. And that wouldn't surprise me because I said, I think the market in some sectors is a little bit vulnerable here, to some bigger profit taking, not too distant future. So right now, GM's
You know,
telling us nothing, but you can see what it did tell us in the recent past.
right, right. And what I love is the confirmation too. You're not just looking at one thing, you're looking at multiple points to kind of back up the signal. And that really helps. I mean, I've talked about that in so many articles and so many interviews. Always interested in how you're confirming. And even in addition to the signal you're throwing out there to everybody, keep an eye out for the lower highs and the higher lows as ways to kind of validate that trend to make sure that it is a true trend. It's really forming and the opportunity is truly there. So that confirmation is just such a huge part of trading. And you got to find the stuff that works for you. Everybody's comfortable with different tools. They get familiar with them and they're good. But at the same time, looking at new stuff and finding new opportunities, that's can help you kind of adapt to a wild market, and that's exactly what we're in right now. So this is incredibly helpful.
Yeah,
Um,
just on that
and
point, John, I think one of the things that's for sure in the market is that the market is never as easy as if A then B. So simply saying, even though if you looked at this chart, you could say, well, you could probably make money if you just trade in the color changes, but it's never really that easy. It's never as easy as A then B. And so, as you said, you need the confirmation of the X-ray indicator bars below, and then you need the confirmation of, listen, let's use my common sense head here and say, do I want to buy a stock that's making lower lows, or do I want to buy a stock that's making higher lows? Well, everybody knows the answer to that. So that's what we look for in combination with the blue bars in the X-ray indicator. So you throw it all together and you have pretty good accuracy and you have great risk reward.
yeah, and that's such a great point. You got to use that common sense. You got to all the tools that you see. Well, first off, obviously, keep learning. That's the most important thing. Never stop learning. Never stop looking for information. This trading world is changing all the time. If you're not immersed with events like this, or in chat rooms or groups or whatever, find the one that you like that kind of connects with you. Make sure you're involved with it. Hopefully, we're putting out some tools that are worthwhile for you that help you accomplish that. But make sure you're in that. The second thing is, when you find a tool that you like, X-ray, I'm incredibly impressed with it, but there's always opportunities to use that in addition to other things. So, use the common sense, so many, it gets kind of forgotten so often now. It's great to get that reminder and have everybody kind of keep that in mind as they're looking at these trades.
Yeah,
So,
sometimes we're
nope,
oh, am I
you
centered?
got
I don't know.
camera.
I forgot to turn my camera on
Uh,
before. Okay, am
your
I
belly
centered? I
button
don't.
looks great. Yeah,
Okay, there we go.
there
Okay,
you
hold
go.
on. No, I'm still not centered. Okay. Yeah, the camera's on the
There you
next
go,
computer
Joe.
over. Okay, yeah. I don't know if that's gonna stay, John. These darn things. Okay.
Uh,
Anyway, here we go. Okay, that'll have to do. Okay. Yeah, and sometimes I think to that point too, John, we're so busy looking at indicators that we forget to look at the price. Remember, price is everything is a derivative of price. So just being aware of whether I'm making higher lows or lower highs, or you can't really underestimate how important that can be, right? So until I see a higher low, I don't want to buy anything, and until I see a lower high, I don't want to sell anything. And if you just took that rule, went back into the trades that you got wrecked on, you'd say, hey, if I had employed that one simple rule, which anybody can employ, you don't need any experience to apply that rule. You'd have better results.
yeah, listen, let me ask you this, because talk to so many traders. Where do you get your accountability from? You talk about rules, you talk about confirmations and everything else. Everybody's trying to improve our processes all the time. So what is it that kind of gets you the accountability to stick to those rules? I think I'm good. I've been listening to some of the best traders in the world for decades, but yet I am still prone to making dumb, stupid mistakes,
Yeah.
So, but if I don't put some accountability out there, I'm even more vulnerable to it. What keeps you on track?
Oh, okay. Well, that's a whole nother webinar beyond this. I will say two things. No,
Yeah.
like I have what we're talking about right now, and I think you probably didn't even know this, but about me, but I have because listen, we've all been through that. If you've read Market Wizards, which is a story of the greatest traders, there's all sorts of stories of them staring at the ceiling, going, "What the hell am I doing?" So we've all
Mhm.
been through it, first of all. So don't beat yourself up. But if you go to YouTube and my name and Google neuroscience of trading, you'll find some YouTubes on that, and some ways to hold yourself accountable and some ways to catch yourself. Um, I just I don't want to go. I don't. Those are hour-long webinars, and I'm just going
Yeah.
to say that our brains are hardwired for the rest of our life to do different things than we need to do in trading. So first of all, I would say to you, don't sit there and say, why am I so stupid? Why do I do this? Blah, 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 blah. That's not helping you. Just acknowledge that, okay, um, I've done this. It really comes down to this. It's a matter of getting your conscious mind to be the observer of your unconscious mind. Um, it's like this. It's like, we've all seen this happen to other people, where you can look at somebody doing something and you go, what are they doing? This is only going to end one way. But
Mm.
we can't see ourselves doing it, right? So we have to learn how to be the observer of ourselves and let our conscious mind observe what our subconscious is doing. And we know the triggers of that. We know that when we're sitting there and, God, this has exceeded my stop, but I pulled the stop and now it's gone below. What should I do? We know that that's a trigger of, you know, now I'm in trouble. So your conscious mind recognizes it, and it has to override your subconscious and say, okay, listen, here's the plan that I've written out for when I see that my subconscious has gone off on its own again, which it is wont to do. 95% of everything we do comes from our subconscious. So, yeah. So
Connecting
that,
those two
yeah,
parts, that's huge, and
yeah,
like
yeah,
having
yeah,
the conscious part of
yeah,
your mind be the accountability buddy, and
yeah,
kind
yeah,
of keeping you on track. For me,
yeah.
it's writing. For some reason, when I write stuff down, I must
Hmm.
be using a different section of my brain.
Yep,
So
for sure.
I write basically write my rules out, not type them, just handwrite them, and
Yep,
then I rewrite them about every 2 weeks. And they could
yep,
not have changed. I might have modified them, but
right.
not only does it help like get through my thick skull, but it
Yep.
also helps me track what I changed. And so then I can go back and see, well, in that period since I made that change, did things get better or worse? So, I think you're it's so important to understand that. And it's great to know that there's resources out there. Definitely. We'll have to dig up some of those YouTube videos and get people, access to that. But that's such a key part of it. Well, Joe, hey man, I just want to say thanks. I know we do these. These are quick little chats that we do. It's just a few minutes. We bring a handful of folks in here. We send it out to the rest of the audience, but the people in the room are extra special. They're the best people ever. We love having them here. Thanks for the questions and glad everybody can jump in with us. I know the market's opening and we all probably are anxious to go in there and see what's going on. But Joe, wanted to say thanks for taking the time out for sharing this with us, giving us a little glimpse of the X-ray indicator, and we'll put links to the X-ray in the chat. I'll send out a follow-up with this if you guys want to rewatch it or pick up any of the tips that Joe threw up there. This thing was kind of full of tips for a short video, so it's really impactful. Thanks again, Joe. Appreciate your time.
Okay. Yeah. Yeah. And thanks, guys, for showing up. And I apologize that I was tardy. Okay. Thanks, everyone.
Take care, everybody.
Okay.